for the 14th of February 2025. Okay, so come, let's get started. Now, so today I'll talk a bit about the inflation report analysis and the Federal Reserve outlook overall. Now, the CPI inflation report was released recently, not this recently, revealing a higher than expected increase in inflation. Now, the report provides an overview of the latest inflation data, its implications for interest rates, and key insights from Federal Reserve Chair Jerome Powell's recent testimony to the Congress as well, right? So, inflation data overview. The latest inflation figures indicate an acceleration in both headline and core inflation. Now, the headline inflation increased to 3%, up from 2.9% the previous month. Core inflation rose to 3.3% compared to 3.2% in the prior month. Now, this marks the fourth consecutive month of rising headlines inflation, indicating potential challenges for the Federal Reserve in meeting its 2% inflation target. Now, is this running out of hand? It's a concerning thing, given that it's a fourth consecutive month. But if in the coming months we see a figure more than 3% for the headline, and probably more than 3.5, 3.4, 3.5 here, then I would start looking seriously into the overall inflation. Okay, so this is something I will need to look at, because temporarily, yeah, the market expectation is due to, there is some fear. So preparations for whatever is happening fundamentally due to the change of leadership in the US. Now, but if you look into detail into all the anti-inflation thing, the primary driver of core inflation was shelter costs. Okay, just to let you all know. But we shall see the others contributing factors as well. But right now, as of the current reading, the primary the driver is in shelter costs. Now, how is the Fed's response to the interest rate outlook, right? The Federal Reserve primary objective is to bring inflation down to 2%. This has been communicated very, very clearly to everyone. So prior to this report, market sentiment suggests that the Fed was on track to achieve this goal. However, the latest data has shifted the narrative from a temporary setback to a concern over accelerating inflation. Now, market expectations for interest rate cuts using the CME Fed Watch tool. Market expectations for upcoming Fed meeting have changed as well. For the 19th meeting, before the CPI release, there was a 95% chance that the Fed would not cut interest rates. After the report is increased by 2.5% to 97.5% right now. Okay, so March meeting, we know probably there's no cut. We understand that part. The May 7 meeting, prior to the report, there was a 78.2% chance of a no rate cut. Post-report, this probability increased to 86.1%. So now, even the May, we're not expecting the cut there. So when is the next one, right? The next one would be September 17 meeting. Okay, okay, so we have the June one as well. We have the June one, sorry, we have the June one, we have the July one, but I want to show you one thing. If you look at the probability here of the rate maintaining up to July is still 50-50, right? So what is showing that something that is more than 50-50, that will be September, right? Because the no rate cut the no rate cut probability stands at 39%. that gives the cut probability at 61, and that's the only one that you see the cut's going to happen right here. So they have pushed back, but of course, there's still some time to go, you know. But these are the current probabilities. Probably if we get results coming in, you know, after before May, if results, inflation results recover from now until May, probably we might see these probabilities change. Okay, so I want to reiterate, it's still a bit too far in time, but this is what the probabilities are showing right now. If there's any cut, it probably will be in September. Okay, now what is the testimony? What did Fed Chair Jerome Powell statement? What did he mention during the testimony this week as well? Now, Jerome Powell provided key insights during his testimony to Congress on Wednesday. No urgency to cut rates, obviously due to the inflation that we're seeing. Powell emphasized that reducing rates too quickly or too aggressively could undermine progress on inflation. Now, data-driven approach, the Federal Reserve will continue to assess incoming economic data and remain flexible in its decision-making process. And finally, if inflation does not demonstrate sustained progress towards 2% target, rate cuts will not be implemented. They will not be implemented. And conversely, if labor market conditions weaken unexpectedly or inflation declines faster than anticipated, the Fed may consider easing policy as well. All right, but this is something that, you know, I don't think may happen, because if this happens, we are going to see a huge market correction. If they increase, because it's not going to be good. So at this moment, I don't see this, because no rate cut alone is not a good thing already. Now, as a conclusion, with all this kind of news coming in, with the trade tariffs, fighting on, and if last night I haven't had a chance to go through in detail yet, because before going to bed, right? The President Trump, right? He mentioned one thing. Today is tariffs day, and this is something that we need to understand and digest in detail to understand really what this means. Is this just more threats to bargain for better deals, or this is a full-on, he wants to do things Trump's agenda and full-on huge tariffs? We don't know. I need to look into detail, and this is not something that you just read and then just say, it's just a short while. Okay, but I'll report on that soon. Yeah, so whatever it is, the latest CPI report presents a challenge for the Fed as inflation remains above target and continue to rise. Now, with inflation pressures persisting, the likelihood of imminent rate cuts has diminished, prompting the Fed to adopt a cautious data-driven approach, which it's normal. We expected this. Now, as a result, the US dollar rapid sell-off remains unlikely in the near term. I don't see this. If you remember, I did mention whenever it came to the charts right now, the US dollar is ready to come down based on the structures. But looking at it, if you look at the bigger time frame, and with this news, it could probably turn into a consolidation pattern in the higher time frame before moving up again. But is it going to move really high? I don't think so as well. Every new high probably be the last high, and then it comes down from there. Okay, so one of the best ways to trade is always to combine both fundamentals and technicals. Right now, fundamentals is telling me that if even there is a sell, a move down in the dollar index, which we're seeing right now, probably it's more of a consolidation move, and then for it later on for the US dollar to rise. But we'll see. We'll see, because at the end of the day, movements, these fundamentals is supported by data. Okay, if data shows otherwise, and for every move down that you're seeing, and US dollar index continue to consolidate, then of course the selling will continue from there. Okay, so let's take it at a time and let the market dictate, and we just follow with the flow. With that, that's the report for today.